Data centers are the single greatest piece of infrastructure that is building the future of AI. And if you don't know these companies that are building the future, you might miss out on some of the top stocks to be watching that could be the next NVIDIAs. Now, not necessarily am I saying you have to buy these stocks, but you should know the information that's in these companies. You should know the market that they're starting to grow into. And speaking of AIs that are impacting the world massively, we have a new tool and revolutionary system that we're integrating new AI technology into this Thursday. And right now you can get on the first access list for free. So when it comes out, you could be the first to get on the list and notified. Make sure to click the first link down below so you don't miss it. Now, the first company is going to be APLD. APLD is a company I personally invest in and that we trade quite often. And it's a pretty small market cap. We've seen them have some spikes back in 2021 up into that $34 price range, but really back into 80 cents here in 2022 and swinging between $1 and $10 a share until finally breaking out above this $13 price point. Now they're on this consistent uptrend. We see them breaking out above resistance, starting to find this very consistent uptrend and pattern up into this resistance of about $16.50, trying to make a 10% swing, getting up into previous highs and above. Now, the company has been growing because they've signed some good deals. When you're looking at AMD, you're looking at GPUs. When you're looking at NVIDIA, you're looking at GPUs. When you're looking at Broadcom, we're talking semiconductors. We're looking at Taiwan Semiconductor, ON Semiconductor. These are the chips that go into the technology that build the AIs of the chat GPTs, the Groks, and what have you. And one of the things is they can't just have these things straight off the manufacturing, then they're good to go. They come out of manufacturing, then they have to be put into a data center. And so this company, Applied Digital, builds those data centers. They focus specifically on one of the biggest problems, which is sourcing that energy. You know, if you put a data center next to a small town, that whole town's going to have to build out an entirely new grid, or they're going to have to put up a dam or put up some wind turbines or something like that. And essentially, they're focusing on cooling technology that's efficient. They are going to the point of generation, so wind, hydroelectric, solar, maximum efficiency that they can find with sustainable operations. Then you look at their partnerships. They got partnerships with Supermicro Computer. They are also working with NVIDIA, Dell Technologies, Intel, Hewlett Packard, Supermicro again. And so this is what they're doing. They're partnering with AI companies and they're saying, hey, we'll build you your data center. They got CoreWeave here on a 15-year lease term for $7 billion. They also released another announcement for $3 billion with Polaris. It's a 280 megawatt AI factory near Harwood, North Dakota. Now, it's designed with the ability to scale beyond that 280 megawatts. But the thing that most people don't realize about the data centers is that these data centers are now going to be on a lease and on a contract with Applied Digital. So Applied Digital's got $3 billion here. They had that $7 billion there with CoreWeave, which has been upgraded. This is where it gets interesting. Their market cap is about $4.3 billion, so much smaller than that of the deals that they're signing. Now, their revenue's been low because they've just started to get these deals in the last month or so, and their revenue's at $38 million in the last quarter and annually bringing in about $150 million. And so when we look at their net income, their net profit margins, they are down at the moment. Their liabilities are at $1.2 billion with their total assets at $1.9 billion. So essentially, their assets are up 145%, while total equity is up only 93%. So the reason that we're following them and we have them here at number one is because of the infrastructure they're a part of, the partnerships they've established, And most likely, the efficiency of those data centers being in North Dakota, it's a cold place. I had a friend about 3 weeks ago, someone here on the channel that lives in North Dakota, right around where these data centers are being built. He said, they have a lot of wind energy. I don't know so much about the hydroelectric. He said, I don't think they have that, but they have the potential to do some solar, but it really only effective in the summers. But the wind is pretty good. And there's a lot of companies that are coming to that specific area to build their data centers. And not just because of AI, but because of the cold environment there, it makes it easier for them to have those data centers run efficiently. They don't need, let's say, an AC in the building during the cooler months. So that is a big factor for these companies, and APLD stands to benefit. Now, they're at a resistance right now. So from a chart perspective, there's three things we look at. We look at the market, which they're in, growing, the analysis, which from a news perspective, their partnerships, they look pretty good. From a technical perspective here, it seems like or from a financial perspective, they look good in improving their balance sheet. Not necessarily so good on the revenue side, but that's most likely going to increase. And then you look at the technical side here, and we see them in this little uptrend that's been happening for the last few weeks, trying to hold this bull trend and continue up in that $17 range. Now, if they get rejected here, which they have before around $16.50, the next level of support, if they can't hold above $16, would be down here around $15.20. So on a shorter term trade, looking riskier, more margin for error can be given to yourself if you're going for the long term. So you could buy and just kind of wait it out. It's probably a long term play that is like every company we follow. And then with the trading on the shorter term plays, most likely we would see that this company could have a correction. RSI and MACD looking a little bit overbought. Unless we see a bull trend continue, they might sell into that $16 range to $15.20, which is about a 5% sell down that short-term investors should be ready to weather if they're going to be in it. Now, the next data center company that I've been wanting to cover with you guys is called VRT. VRT, they're $128 a share. They've been on a similar kind of uptrend, and we were waiting for them to pull back, actually. It was last time we did analysis, they were up here around $150 a share, and now they're at 128. And they specifically specialize in multinational provider of critical infrastructure and services for data centers. They're out of Ohio, and Vertiv has 31,000 employees worldwide, operating in more than 40 countries with 24 manufacturing assembly facilities. So we see 31,000 employees. They're bringing in now on a quarterly basis 2.6 billion. That's on a quarterly basis. Their annual revenues are at $8 billion last year. This year, they're on track to surpass 10 billion in revenue. Then you have that net income positive at over $250 million, and then total liabilities are up to 7.28 billion, with total assets up to 10.4 billion. So that's looking pretty good. The financials look good. The market cap's at 49 billion. So they're up there into that $49 billion range. When we see them have 10 billion in assets and bringing in about $10 billion a year, or on track to from a revenue standpoint, that kind of puts them in a fair value standpoint, probably around that 20 to 40 or 50 billion dollar mark. So they're still up there right now, and that's why we've been watching them, kind of waiting for more of a pullback. Long term looks pretty good. Short term, we were kind of looking for something like this. A sell down into this, $98 or $100 range would put them into that PE ratio that would be more aligned with how we invest. Warren Buffett says when he was asked that he looks for a PE ratio of about 20 or better or lower. When you look at Benjamin Graham, he was asked, what do you look for in a company, the mentor of Warren Buffett? And he said, I look for a company that brings in as much money and has total assets that are greater than that of their market cap. So in this case, like we mentioned, they're about $20 billion in assets and revenue for the year. And so when their market cap's at 48 billion, technically from a Benjamin Graham perspective, they would still be overbought. Now, the shorter term trades could be available, but since they're already a large cap company, you might not see as many lucrative opportunities short term trading a company like VRT. A long term play, you can't go wrong really if you're 5-10 years buying at any one of these moments. But when we're looking at it from a perspective of getting a good entry, most likely your best entry is going to be down here in this $100 range, or even as high as $115, and that would be a lot more favorable and comparable to where their true value is. So those are the focuses for VRT. When you look at VRT just from an institutional ownership perspective, you kind of get a understanding. Vanguard is a big holder, BlackRock is a big holder, Bank of America and State Street are in there, and the institutional ownership is pretty high there at about 80%, which means if any one of these companies want to see the stock go down, they can push it down. And it's kind of on its way down right now. You can see it's up here. And if it's 80% institutional ownership, most likely you could see a correction continue, because they're saying, a lot of institutions own it. What's this fair value really look like right now? Maybe we could see this thing sell off a little bit down to that $110 range. But long term looks good, and I have it there on the list because of their tremendous developments into data centers. Now, if you look at their website too, just to get an idea of what they do, it says the world depends on data, and we power and cool it. So they do co-location data centers. They work with federal customers, healthcare, manufacturing, retail. They power growth with battery energy storage systems. They have these setups that are similar to Supermicro computer that house those GPUs that we were talking about. So you get the GPUs from AMD or from NVIDIA, which are great long-term investments. You look at them, you put them into one of these things and hook it up, and it's got liquid cooling. And these are basically the housing canopies, or the housing, what's the word for it? Basically enclosures for those GPUs. And so they have really advanced enclosures, prefabricated infrastructure systems for inside data centers. And that's where they're capitalizing on bringing value to the marketplace. And we see big companies like NVIDIA, AMD spending in droves trying to get the amount of compute that they need. Microsoft, Apple, Tesla all said in their recent earnings that they plan to invest more into AI infrastructure over the next year. And so when you look at some of the movements, I was just kind of talking with one of our team members here. I'm actually in the company Slack. And Yoga put together our earnings. So we have earnings. We're going to be dropping targets later today for NVIDIA. So NVIDIA is reporting earnings tomorrow after hours. So if you want the targets for NVIDIA stock, and you want to know when companies like Dell or AMD or any of these data center companies are reporting earnings, when they're reporting earnings, and the expected targets and movements that we're expecting in the market for those earnings, then you can join Stockmates and get access to those targets along with our daily live trading sessions that we have every morning at Market Open. So we just wrapped up our daily live session this morning. I'm traveling, so if I'm traveling, we still do it 6:30 a.m. Pacific Standard Time. Members get an email for the private live session, then they get basically keyed in, and they're watching our live trading every morning. And if you want the targets in there as well, there's the community available for you too inside of Stockmate here, along with the earnings each week, with some good press releases from Lawrence. We got over 24 individuals with a net worth of over $1 million inside of StockMate. So 24 people that are a millionaire. So if you want to check it out, it's the second link in the description. I would encourage you to simply take a look. Now, the next AI company that is impacting the data center space is going to be this company called TSSI. So TSSI is number 3. And number 3 has sold down pretty tremendously and looking like a little bit better of a deal. You can see on the technical perspective, they sold all the way down to their 200-day moving average. The RSI, the relative strength index, is indicating that they're oversold. It's a buy. The MACD is also indicating an overextension down here, where you can see that it's now looking like a buy. And you see that it's down to that 200-day moving average, just at this previous resistance level that most likely could act as a strong support. Now, when it comes to TSSI, the financials for the company is pretty impressive because they're at about 449 million. So the PE ratio is actually the best that we've seen out of all these companies. So they're under $500 million, so pretty small cap, which means there's risk. But when you look at the PE ratio, this is where it gets interesting. Quarterly, they've come in with revenues varying from 10 to 50 or $100 million in a quarter. And their net income is positive. So they're not operating at a loss. In fact, their net income is up. And you can see year over year, they've improved their revenue in 2024. Every single year they improved. And in 2024, for the last 4 years at least, they came in at 150 million. Now, when we look in 2025, they're actually already on track. They've already passed basically 150 million. They're at 140 million right now for 2025. So they're on track to double what they did last year. So the balance sheet is good as well. The thing that's a little bit, I'd say sketchy, but not sketchy, that's not bad, yes, is that their liabilities are kind of high. They're at 129 million. But they got about $10 million more in assets. So they're net positive, but you did see their liabilities get up there a little bit, which is a little bit concerning. Sometimes that happens, though, when companies are looking to grow, they increase their liabilities. And it's not like they wouldn't be able to pay off their liabilities right now. So they're still in a good spot. Now, they're based out of Round Rock, Texas. And if we take a look at where they've been kind of developing their technology and what they have going for them, it's going to be over here. It is TSS Inc. Okay. And they focus on data centers, capacity and complexity, simplified, delivering complex solutions with flexibility, quality, and speed via a range of integration and deployment services. So they have modular edge services, which means they provide end-to-end modular solutions from design to configuration. Data center services, we offer comprehensive suite of data center services, including data center moves, site surveys, and facility. So they're kind of in that construction / IT / maintenance, which is a good spot to be. And they're public. So it's interesting because not always are these companies public. You could look at some of their services from a customer-facing standpoint. They have rack integration, so installing big racks. They have data center moves, so moving a data center to a different place, so relocation of data centers. Now, this is actually a big thing. A lot of companies are saying, hey, we're paying this much over here in Arizona in taxes, and it's hot. We're paying this much in energy bills. What if we move our data center over into Michigan? Or what if we build a manufacturing over in California? Or what if we go over to, up to North Dakota? And what would our spending be there? Oh, well, we'd save this much a year. Okay, now let's see how much it would cost to move our data center. This is the company that they call. And a lot of times, the services that they're providing, pretty straightforward, pretty much like, hey, let us know and we could probably do it for you. And anything related to your data center, we're ready to help you, which is a good market to be in. Now, we saw them pull down with the financials looking fairly good on the income statement improving year over year to this 200-day moving average. So they're trying to bounce this 200-day moving average, potentially make a run back up into these levels. Their next level of resistance or support is at $20 a share. Now, if you're going to trade it, the most important thing that most investors forget is to have a plan. If you're in the short term, this is the type of trade where you want to manage risk, because they are, just $500 million market cap. They're not a big company. They could fluctuate heavily. And that's actually a really good question. Institutional holdings for TSSI, and we can actually see what that looks like. Looks like just 25% institutional ownership. So the institutions haven't really moved in. Maybe you got 1 million shares with BlackRock, 945,000 with Vanguard, but we haven't seen institutions move in on this one. But we've seen the increased positions be greater than that of their decreased positions. So in total, institutional holding is low. So maybe manipulation could be fairly low. But we see this sell down recently, and we're saying, okay, if they can bounce $15, $16, we're looking at a 30 to 40% swing up into that previous support and previous resistance at $20 a share. If they make it to previous levels that we saw back here that might be more aligned with some of the deals that they get and the revenue that they come in with, right now they're on track to do about $300 million in revenue, which would mean that combined with some of their assets, their fair value is around that 400 to 500 million. And that's kind of where they're at now. But data center companies and AI companies oftentimes are going to be trading higher than that of their fair value because of AI's rapid growth in the world. And so we could see them get back up into these multiples that would be, 800 million to $1 billion, which we would see something like this, about a, we're talking about a $23 price point to what could be a $30 price point again. And that's 100% potential increase there on TSSI. So that's why we got them there at number 3. Now, the next company that everybody seems to be asking me about is this company called WULF, and it's WULF stock. Now, last time I talked about them, we actually had an anticipation that they were going to sell down. The outlook that I had was right here about 950. I was saying I think they could sell down about 25% into this range of about 670. To keep it short and sweet, it's a similar scenario. They've gone up, so they're kind of like, imagine we were looking at them same way we were looking at TSSI just a minute ago, and they had sold down to a 200-day moving average or something like that. They made that move that we were just talking about TSSI potentially making. They made that move, and now they're up into those all-time highs. Now, it would make sense that for them to balance out, or a conservative play, we'd see them get back up into this, get back down to that $7 range. The reason why is they've had some good deals. They partnered with Google recently. They're partnering with Alphabet, and they're focusing on data centers and also mining Bitcoin. But they're making about 47 million a quarter, okay, which is good. But then you have their assets. Their assets are up to 869. It's good, but their total liabilities are pretty high. They've surged a lot. And so when we look at their market cap there of 3.7 billion, it's really just, I mean, these are very similar to what we were just looking at some other companies, except their valuation is about 2 times the multiple that they would be if they were more towards fair value. And so that would mean WULF stock, we'd look for more of a sell down. You can see the RSI, the MACD are overbought and above that into the sell territory right now. And so while it could continue up and you can trade it, just make sure you have a plan of a clear stop that is much smaller than that of the margin for profit you're going for. But the probability of hitting that larger margin for profit than that of your stop, in my eyes, would be a lot less likely than if you had the fair value lining up and you saw them sell back down into this range of around $5 to $7 a share. I think that would be more accurate, maybe even down to this previous resistance level here over in about a 650 price point. Previous resistance could act as a support there, and it would make a lot of sense. In fact, we've seen them consolidate between those levels before, and that's kind of where they're at the top of right now. And so we'll watch. We'll see how they react. I mean, maybe they're pricing in for something bigger, and we see them start to use that previous resistance as a support. But I think what might be more likely is a potential sell down there, and we just have to monitor it. Now, the last data center company, it's not the least by any means, is going to be this company called ANET. So ANET is Arista, and we've covered it a lot. In fact, last time we were covering it, we were looking for a 32% increase from July or June, up into August, and it made that move. It made that 30% increase up into this level. So it's been really staying true to pattern. Now we see it get back into this trend and continue some of its direction. It's possible now that it's made that move that we see it sell back down into this $125 a share. It just reached $141 a share, and it's right now at 134. But why do we have it on the list here? Is ANET is Arista Networks. Their market cap is pretty big. They're 168 billion. They're a great long-term play, and their revenue has been around $2 billion a quarter. Now, when we can compare that to Vertiv, for example, Vertiv is doing about $2.6 billion a quarter, and their market cap was only at 49 billion. So again, same revenues, but Vertiv was at 49 billion. So that's why this isn't really the best one, because they're doing, again, 2 billion in the quarter, but their market cap's at 168 billion. So Arista might be on the little bit of the overvalued side. You can see their PE ratios at 52. Their balance sheet, though, is a little healthier. They got $16 billion in assets with their liabilities at 5 billion, whereas Vertiv was at about 10 billion with 7 billion assets. That's really the difference, is the liabilities and the assets. And so as we're looking at ANET right now, they have some partnerships. They are a chip stock. They got about 4,000 employees, and they're doing large data centers, cloud computing, high performance computing, and they work with some of the world's top AI companies. And if you look at it, Arista.com, expanded AI-driven campus and branch networking offerings. They're working with some of the top companies in the world. You can see here their partners here, partner code of ethics, technology partners they have here include AWS. So AWS is big on data centers. Broadcom, okay, really big. They provide the chips for Apple and Google. They're partnered with CrowdStrike. You can see some of the other companies. These are big companies. Elastic, Google Cloud. So they build for Google Cloud. Grass Valley. Okay, that's where I'm from. That's funny. Intel. Okay, Microsoft, NVIDIA. Okay, so these are top companies. Microsoft, Azure, basically all Silicon Valley. VMware. You got ServiceNow, SentinelOne. These are some of the top tech companies in the world, maybe with the exception of like Oracle or Tesla that we don't see there. But yeah, big companies. So they're right now at a level where they're maybe overextended. And now we're saying, okay, they made this 30% move. Next level down into this 5% move, potentially down in this $115 range would make a lot of sense. And so maybe not the best deal. But the best deals that we found, I think, would be considered. It was Vertiv. Okay, so we were looking at Vertiv just to review, one of the top companies. The other company we were closely watching here was WULF stock. That's WULF. Okay, WULF, there it is. That one's also overextended. One of the better deals we found seemed to be TSSI. It's a top deal in my eyes. I think they're in a good position right now. And then one of the companies that's also recently made some runs but has been an excellent outlook here up into this high level, but still looking like they got some room to run, is APLD. So those are the 5 data center stocks. And if you're, let's say, trading stocks, you're investing stocks, and you've lost money in the past, the goal is to not lose money. In AI markets right now, the best thing you can do is to not lose money. And some people, they pay that tuition of going through investing, maybe they're losing some money. But here's what you need to do. Realize you don't need to lose a lot of money to learn. You just need to keep your account afloat. Get to a point where your account is floating, or that you're making substantial gains consistently. And more importantly, you understand why those gains are happening. Traders or investors getting to the point where they're making good returns, they're making good money, and they even have a strategy that they've developed and that's working for them to identify new opportunities. But they don't write it down, they don't really study what's working for them. And then when things start to go badly because they deviate from that way of doing things, they don't understand why things started to not work for them because they didn't write down what was going well. Every good investor that I know, this is what I would encourage you to do, is write down what's going well for you, write down what doesn't go well, and things you can do to correct those mistakes will make all the difference for your long-term growth and your short-term growth. And also align those shorter term trades with companies that you would already want to own in the long term. That can make a huge difference for knowing the integrity of the stock is aligned with the type of companies that you'd want to own. And it gives you more confidence when you're trading short term. And confidence is key because when you have a plan, most investors just don't have the discipline, or they're trying to avoid pain. They don't want to see the loss, so they don't manage a loss, or they don't manage to take profits because they're getting greedy. But when you have discipline, you have a plan, and you're able to have the confidence to execute that plan, it'll make all the difference for your growth. So if you're interested in learning how to invest in quantum, data center, AI, space tech companies, then I would encourage you simply take a look at Stockmate. It's the second link in the description down below. I'll send you a free t-shirt, and you can get our daily live trading and targets for the week every single week. So it's inside there. Again, we got 25 millionaires plus in there right now. And if you want to surround yourself with like-minded investors, a lot of the insights won't come from me. They come from those investors that have 7-figure portfolios that don't have YouTube channels, that are in Stockmate, or that are around in the community, that are saying what they're looking at, the insights they have. I'll tell you, some of the best insights have been from investors that are not me, that are investors that don't have a YouTube channel, that don't understand how to set up the camera, but they got the maybe they know how to set up the camera, but they just don't have a YouTube channel. It's hard. It's not easy to do. And so that's why we put such an emphasis on community. And that's why you can get the community down in the second link below. Appreciate you all. If I earned your thumbs up, hit the like button. Do consider subscribing, and I'll see you in the next video. Take care.